Good afternoon, everyone. Welcome to our webinar today, where we're discussing our investment opportunity in Pyramid Farm. We're going to get started here in just a minute. Thank you all for being here. I'm going to turn off my video while we present, and then I'll come back for the Q&A at the end. Throughout the webinar, certainly feel free to send any questions into the Q&A box, and we'll get to them at the end. Great. Here's some disclaimers to share with all of you. Just a quick introduction from my end. My name is Melissa Bermudez. I lead all of our investor relations efforts here at Farmland Capital by Farmers Business Network. And I'm in charge of the whole syndication and operations process for our product. So feel free to reach out to me at any time. My email is right here, mbermudez@farmersbusinessnetwork.com. For a little bit of background, I started my career on Wall Street in investment banking, moved into the buy side in an investment role, where I was responsible for about $2 billion of assets under management at a credit fund investing across diversified industries. Later moved into a startup role where I managed operations, marketing, supply chain for a startup, and most recently have obviously joined the Farmers Business Network team to lead out this effort to connect you all with opportunities to invest in farmland. Here's what we're going to talk about today. We've mostly got new investors on the call, so we're going to start out with an introduction to Farmland Capital, then go through the farmland asset class, and then talk about the actual investment opportunity today in the Illinois corn and soybean farm. So what is Farmland Capital? Farmland Capital is a way for investors to partner with farmers in investing in their farmland. As you can see here, we've got two standard capital structures for a farm. The top is what it looks like for a farmer to buy new land. When a farmer's buying land, unlike in the housing market where you put down 20% and the bank finances up to 80%, the bank is only able to finance up to 60% of the value of a farm. A typical farm puts $1 million. The bank will finance about $600,000 of it, and the farmer has to come up with the remaining $400,000. That is a lot of money. And what we're here to do is really help farmers with that down payment on the farm. This is in this case of buying new land. We also help farmers refinance their capital structures, which we can talk about further. But in the case of buying new land, what we essentially do is come in on the down payment and split that 50-50, which is the bottom bar here. And so what the co-investment looks like is a minority portion of the equity value of the farm. Usually it's about 49% or less of the down payment, while the farmer is investing 51% or more of the down payment. And again, that's usually about 40% of the farm value. Why is this meaningful? Well, as I mentioned, from the farmer perspective, it's helping a farmer to buy new land. It's helping them to reinvest in their own business by cashing out their equity. Or in some cases, in a lot of our cases, it's actually a younger farmer buying out an older relative. Meaningful because it's land that was never available on the open market that we're able to provide you access to as a result. Or again, to that point of cashing out equity in their business, they're able to use that to reinvest in their land and build long-term value. We think this brings a variety of benefits to the investor. Back to that structure on the prior page, it's a co-investment in a farmer. You're helping a farmer build that path to long-term ownership of the farm. You're investing alongside a farmer as opposed to in a tenant and landlord model. And so we think it's a really really differentiated offering from that perspective, in the sense that you as the investor are partnering with the farmer. You're not competing with the farmer to buy out land, and you're helping maintain rural ownership of land in rural hands. As a result of all that, and as a result of the structure that we have built here, you as an investor are able to partner with experienced operators. You're gaining access to exclusive properties in almost all the cases we've certainly presented on this platform to date. It's land that was never available on the open market and is therefore usually very high quality land, because it's farmers that are trying to maintain that land for future generations and hold on to it as a really valuable asset. And overall, because you're partnering with these farmers for the long term, they are invested in the productivity, the soil health, and the overall value of their land, and therefore able to invest in methods and ways that help improve soil productivity and ultimately the environment for the long term. A little bit more about how that structure actually works. So as I mentioned on the prior slide, what the investment looks like is a roughly 50-50 investment in the equity value of the farm. And so the way we actually structure the equity is, as I mentioned, the farmer owns a little bit more of the equity. The investor, all of us, own a little bit less of the equity. We really want to structure it that way so the farmer has the perspective of investing for the long term and making there's that incentive for them to make long-term decisions in the best interest of the value of the farm. What that ends up looking like from in the investment term is that the farmer is receiving all cash flows associated with running the farm through the investment period. They're paying all taxes, they're paying all expenses, and they're making all management decisions in operating the farm. That being said, the way it works out in the end is at the end of the 10-year term, the farmer gets less of the appreciation in the farm. So during the hold period, the farmer's getting all cash flows. At the end, when the farm value goes up, that gain in the value is split 60-40, 60% to the investor and 40% to the farmer. What this structure does is come out to roughly equal returns for both the farmer and investor. In this deal specifically, we model about a 14% return for both the farmer and the investor during the period of the investment. And what that also means is that while generally USDA land has appreciated about 6% per year since 1940, because of that outsized portion of appreciation, you as an investor see that 6% multiplied to about a 14% IRR. Through these slides really quickly on who FBN is. Why are we involved in this structure? Why are we involved in this product? We are a company really devoted to the profitability and efficiency of farming and of farmers in this country and actually across the world. Every dot you see here is a potential investment opportunity for you as an investor. It's a farmer that we serve with our products that span from data science to inputs to financing. We are an extremely respected company in the agriculture industry, supported by an investor base that includes Fidelity, Google Ventures, T. Rowe Price. And we also work with some really strong partners in agriculture, including ADM and Poet. We're over 1,000 employees at this point, and as I mentioned, have access to a member network of almost 50,000 farmers that, again, lead to the differentiation of our platform. As I mentioned, as part of our mission, are really here to empower farmers and support farmers, which has worked for us in building a very loyal member base that views FBN as a trusted advisor. This is meaningful for you as an investor because it leads to better investment opportunities and better outcomes across all stakeholders. And we really think that's a key piece of our platform and the offerings that we have for you today, in the sense that our farmers come to us with opportunities that are very important to their own personal wealth and their own future generational wealth building, and they're trusting us with those opportunities that we're able to provide to you all. This is just a little bit more about our team. You've met me. Peppo on the top left is my main partner in terms of the diligence and sourcing of our investment opportunities, but we've also got a whole team of data scientists, economists, loan advisors, and underwriters that support all the efforts of Farmland Capital. And so you've really got the entire FBN team behind you here in our platform. So the farmland asset class. A lot of folks are surprised to see this chart that shows farmland values roughly in line with the S&P since 1990. That the farmland values are shown in the green line. As you can see, that's a lot less volatile than the S&P 500, and actually particularly in the past year has proven that way as well. So in general, the asset class has performed very strongly with very low volatility. And that is what we forecast going forward as well in our return scenarios. As well, kind of given a lot of the uncertainty we all hear about on a daily basis now, through recessions, farmland has proven to be a dependable store of value through each of the past 4 recessions. And as well, a lot of folks comment on, okay, well, farmland has been up a lot in the past year. What does that mean for the coming years, the coming decade or so? You can see that increase in the blue line here. That is what land values have been doing out in the market. But when you adjust for inflation, which is the red line, we actually are not seeing such a dramatic uptick. And if we look at them compared to incomes, that's on-farm incomes, we really see valuation being supported by the incomes that farmers are receiving. And so while we don't expect 2023 to be as crazy of a year as 2022 was for farmland values, we do believe that the fundamentals supporting farmland valuations are strong, as well as the long-term thesis that is a really strong need for productive farmland amidst a world of declining supply on a daily basis. Okay, now we're going to move on to Pyramid Farm, which is the offering we have available for you all today. This is a roughly $280,000 offering size for a 179 acre corn and soybean farm located in southern Illinois. The quality of this asset is exactly what we want to bring to you all on our platform, which is a 4th generation farming family that has been operating this land for decades. And it was a refinancing and buyout of an older relative in order to support the younger generation continuing to farm this property. It's an incredibly highly productive and fertile area of Illinois, and the farm itself has average productivity index of 110 versus the already strong county average of about 97. We also did discount this property given some asset use optionality. There is a lot of general real estate activity in this market, and so we valued it as more of a farming asset, which gives the investor some upside. And relative to that chart I showed you, where 20% investment gave you a 60% change in the appreciation, this investment was smaller. It was about 11 or 12% of the value of the farm, and so that investment gives you about a 37% participation in the change in value. As I mentioned, the returns here on both the farmer and investor side are projected at about 14%. And that's exactly what makes us so excited about the structure here, which is one that outperforms other farmland offerings for investors and also is very fair to the farmer through the hold period as well. From a valuation perspective, as I mentioned, the entry value is below current market prices, both from that discount perspective as well as from the appraisal price, which happened in a world of appreciating prices, and it was appraised a few months ago at this point. It's extremely high quality cropland, and in Illinois, farmland appreciation has generally been in line with the national average of about 5.9%. We show a few different scenarios here in the bottom for projected annual returns. The first is kind of our standard situation of the 10-year hold period plus annual land appreciation of about 6% gets you to a projected net IRR of about 12%. We do want investors to know that your investment is for a 10-year period. That being said, we actually see most farmers refinance their capital structures every 5 to 6 years. And with that, at a 6-year buyout, that comes to a net IRR of about 15%. We also have 2 different scenarios here at the bottom. One is the past 20 years, where annual land appreciation is a bit higher, as well as in an inflationary environment, where you can see the return is even higher. So in summary, the investment opportunity here, we believe we're offering an incredibly highly productive asset that demonstrates the high quality nature of our diligence process and of our farmer base. This farm also employs a few different sustainability practices that we believe will lead to long-term value creation as the farmer invests in ways to improve soil productivity and health over time. And then again, both due to the timing and the structure of the deal, we believe we're able to offer outsized returns relative to alternatives. So with that, please feel free to drop any questions into the Q&A. This opportunity is available now for investments. We ask for commitments by January 11th. We'll close this whenever we fill up. In the meantime, you can reach out to me anytime with any questions. That is my email there. You all should also have emails from me in your inbox, so you can just reply to any of those. And or you can just schedule time directly via that Calendly link at the bottom. So again, I'm going to turn on my video here, and thank you all for the time. Okay, so one of the first questions we have here is just, what does the investment process look like? So as I mentioned, in order to show that you're interested, please just email me. The way we go about the process from here is we're able to accept investments only from accredited investors. That is someone that makes $200,000 or more per year, or if married, $300,000 or more per year, or has net assets of $1 million or more, excluding your primary residence. So once you're able to submit your interest, we'll have you go through an NDA process, as well as submitting the files to confirm that accredited investment status. And then we'll be able to share the documents with you for you to review, from our LP agreement, as well as our investor signature package and any risk factors. And then we're able to accept investments. Once we close, we submit the capital call, and you wire funds into our account. Another one, a little bit more about the 6 versus 10-year term for the investment. So as I mentioned, the structure of the equity investment is a 10-year term. The farmer has to buy out the investor at the end of the 10-year term. Within those 10 years, the farmer can buy out the investor at any time. Within 7 years, if the farm comes in at an appraised value below where we initially invest, the farmer has to buy out the investor at the original agreed value. But essentially, anytime the farmer is requesting to buy out the investor, an appraisal is triggered, and we do that and then compare it to the original value, and that's the value that the investor is bought out at. Okay, actually, one question. I've heard you mention an option before. You didn't mention it today. Is this still structured as an option? Yes, this is still structured as an option. All of our investment opportunities are structured in the same way, which is that minority investment in the equity of the farm. The reason we structure it as an option as opposed to a straight equity investment is twofold. One is that is the mechanism by which we're actually able to see that outsized portion of the appreciation at the time of buyout. Without that, we wouldn't be able to say, with the 20% initial investment, we get the 60% buyout. The other is that it allows us to invest in states that have corporate ownership restrictions. And so the option allows us to invest alongside the farmer. The farmer does retain the title and the deed in their name, but we have recourse to the value of the farm through a few different legal arrangements that I'm happy to go into further. Okay. Any other questions? I'll give it one more minute. Okay, great. Well, thank you all so much for joining us today. And again, any Any questions at all, please feel free to reach out to me. Have a good one.